Um, alright, everything's up. I kind of need to go over the trade recap for Friday. I didn't record. I kind of forgot to hit the record button. Um, I'm down on the day for Friday, but today I'm up, so it's kind of a wash. I'm finishing today around 30, about around 3 grand, 3,100. So I was realizing that opening up into market, we came down in the 8 a.m. candle and we left this relative equal low, which is a super drawn liquidity. Like price pretty much pulls to this stuff. So when we came through on the hourly for 8 a.m., we came down and it didn't necessarily sweep it while I rejected and turned around. So when market came through and we came up into this like 5 minute fair value gap and the opening bell came up, swept these highs, closed and rejected, I was like, all right, I guess I'll look for a short into this area because below here is a fair value gap, high time frame like hourly gap. Usually price will come down, sweep some liquidity, tap into an imbalance, and then turn around and reject. So what I was looking for was I just wanted to take the price from where I felt like it could have gone to an inefficiency. I could have turned around and longed it here when the 5 second broke structure, and we could have been up for some more money. But realistically, I'm not. I already got what I needed. I'm not gonna sit here and be greedy. Knowing that my overall bias on the day was long, I just knew that we had to come down and sweep some liquidity and efficiency first. So that's why I took the short. Um, so when the market came up, I wish I could replay some stuff. Like I can do like a bar replay. But, excluding that, everything in this price action doesn't exist yet. Yeah, assuming this box doesn't exist. When the I can't really do that here. Nope. I gotta stick to what candles work. Okay. So candle, come up, close, and then it closed here, knowing that we swept these highs, rejected. So the next candle, I have to do it here. Next candle comes through, bang, 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 and on the 5 minute, you can see how the middle screen, which is the 5 minute, you know, it's going from one candle to the next. This is where the candle opened. I took a fib retracement, which is this thing, from this high to this low, and I tapped into the 50% of that candle. So I tapped in somewhere here, and then when we came down and started, showing myself like order flow, I don't know why it entered here unless I was on a different low time frame. But I entered, I want to say somewhere here, and then my price averaged about here, and then it just never came back up. So, needless to say, somewhere in here I took a short. This is a short tool, just showing you like where you're help you with your mental, I guess. I pretty much took like a 1 to 10. If your stop was here, but realistically my stop was here. So, I took like a 1 to 2. Not bad. But when this next candle did print and it started showing lower price action, did start moving my stops to about here. So, yeah, I practically entered around 9:36 and we were out by 9:41. So, in about 5 minutes we ran up 3,100. And then this new 5 minute opened up. So when this candle came down, closed here, and we opened up, oh no. sorry, drawing tool. And then we go into the next 5 minute right about now. Price opened up, swept this internal range of liquidity right there, and then it just rejected. So I was like, all right, cool. We're probably still in this because you gotta think about it. My stop is here. Don't get me wrong, my drawn liquidity is so much lower, but price can do whatever it wants. You've seen it where I've been in choppy conditions and it never made any sense, really. So, yeah, so we came up, swept this internal draw. I'm pretty sure this was also like the 50 of the range. Alright, I'm gonna delete this one because now it's in my way. From that high to this low, it was the 50, liquidity 50, so we came down, retracing this leg, retracing equilibrium, which is the 50% of this leg, and then we came in, tapped, and rejected. Price will do this sometimes, so it's best to, like, when you get into your entries, you get in as early as you can. The 1 hour just closed bullish. Yeah. If I took the 5 minute retracement, we'd probably be in this too. So, yeah, price comes through, opens new candle. We come into the 50% of that candle's range. We probably would have entered somewhere here, stop at the low of the 5 minute candle, and then we should have been targeting, you know, this high, this high. We honestly could have traded up into the -2 deviation and this like high time frame liquidity level, but like I said, I took my piece of the pie. We are also introducing a 5 minute fair value gap to the upside after running through this bearish fair value gap. So now this is a fair value gap inversing, closing over a bearish fair value gap, noticing that, people that are in buying are stronger than people that are in for shorts. So relatively, between this bullish gap and this inverse fair value gap, price will 9 times out of 10 come down, retrace, and then dump. If we wanted to, like, let's say we didn't want to hop into this 5 minute candle because of, it just is like, it's so high up in this leg. Like, let's say you wanted a better price. Me personally, I would only, I would only draw out the leg that's up. And if you wanted to, all right, so we know these are gaps. We can see this. So let's say price is here. We could trade in and hop into, which the 0.37 is honestly like a sweet spot when you're trading one 5 minute candle to get a retracement into. But if you really wanted to, you could take the, OTE range, so you could hop into equilibrium of the 5 minute, which is funny because I think that also is, yeah, it's also near the 50% of this candle's, fair value gap. So this might be a sweet spot to take a long from, which is also inside of this bearish fair value gap. But long story short, I'm not trading anymore today. I'm going to go ahead and close out of this. We're going to close out until 9:15 in the morning. It's nice that you can hop into trades and you can get out by fucking 10 o'clock. Usually, every time I hop on trading and I tell people that I'm in to trade, I tell them to give me like, an hour and a half of your time, unless it's like today where you waited for the first 5 minutes to close and then you took the next 5 minute entry and then 5 minutes later you got out. Instead of it being a 90-minute day, it was a 15-minute day. But nothing beats this. Nothing beats this trading stuff. To be honest with you, this is, if you can get your mind right and you can, you know, plan your day, you know, and you can see where liquidity is and where imbalances are, and you can see where the price is next to draw to without, invalidating your plan. Like this is your low-hanging fruit. This is your 5 minute liquidity. So let's say 5 minute inside bar. I hate that. See, if I would have entered there, I'd have been shitting my pants. So we have this low-hanging fruit here. So there's probably people with stop losses there. I keep hitting the caps lock button instead of holding shift. So this is your low-hanging fruit. Market could come down. You know, when we still have this liquidity, could come back up, sweep this liquidity, trade down, trade up, trade down into this imbalance, and then, you know, go back up and trade into this. I don't know why. Oh, because I'm fucking dumb. Anyways, you get what I'm saying. Price will magnetize to liquidity and efficiency. We could come back up, do this number, and then go right back up, but it's whatever. We're gonna go into Friday. Friday, I didn't necessarily follow my rules. I was also wrong on the day. My bias was wrong. I did want to see lower prices. We didn't get lower prices. We're also tagging into this low-hanging fruit. We are gonna come up and tag into this box. It's whatever. I'm not here to rinse the market of every penny. So this is not ideally what you want to see. This is a mess. This is mayhem. This is my mind fighting itself. I was down 3,200 on that day. 34. I was down 3,400. So first trade of the day, I lost like 700. Then I lost 450 bucks, and I lost a band. And then I made 1,800. So right then and there, I was pretty much like square even on the day. And then I lost the same amount of money that I made. And then in between all of this price action where I was hitting, you know, like break even, break even, break even, all of those times when it was at its like peak price, I could have closed out and washed this day. You know, this could have not have been here, and then I would have finished my day with like finished my week up around $10,000. But you know, that's yesterday. You know, that was Friday. Fridays aren't necessarily my best days, so I probably should size down. Today was nice because I was able to enter in for my order and average into my position, which when I hopped in for one contract and I had my stop loss, it was about 700 bucks, which I'm okay with that. Um, and then when price came up and rejected and we started pushing lower on the next 5-minute candle, when I averaged into my second contract, which means I'm doubling my size, when I moved my stop loss to the high of that 5-minute candle, my stop loss was around $700, $800. So I'm risking the same amount to reap twice the reward. Today I was only supposed to make about 15, 1600. With my averaging and price being as clean and as effective it was today, we we made bread. So yeah, so last week I went in and made 6600. In here though, this week when I was making money, I was on Top Step up. I had 7 or 8 trading days that were above the average, or not the average, but the minimum price to take a payout. So I took a max allo payout from Top Step. I pulled out 5,000. That's why my balance is kind of low. Because before I pulled my money out, I was up 13,000, and then I took this loss, which left me around 5 and change. So today I made pretty much back what I lost Friday. This wasn't ideally the plan, you know, because you should be taking every day as is. You know, like, you know, when you have a lot of people living their lives and they plan their week, they plan their months, they plan their in trading, that does not exist. That it does not work. You have to take this stuff day by day, realize what you did yesterday, blow up your weekly analysis. You can wait for your you can wait for your plan to plan out, and that's fine. You'll take less trades. But knowing that I wanted to see lower prices this week, and we're pretty much making the top wick of the weekly candle, and we're trading into that imbalance. That imbalance, I'm assuming tomorrow we should, if we are holding and we shift on the hourly, or we're showing some like today where we saw some like liquidity reversal type thing, then I'm gonna want to take a short. And if we do short, it should be aggressive, and I'm gonna be probably hopping in for at least two contracts, maybe three contracts. Wednesday should be a big day. If not, Thursdays historically are also big days for me, as long as you're right, obviously. But days that I can take less trades are so much nicer than the trades where I'm hitting at least double digits. Usually, if I'm hitting double digits, it either means I'm down and I'm trying to fight for my balance to come back up, which you shouldn't do that because that's necessarily revenge trading. But if you are waiting for your model to plan out, then you're just trading. So it's either market's going back and forth and it's consolidating and it's not really going anywhere. I'll run a lot of trades up, and that's also ideally not what I want to do. So, you know, this isn't good. I don't like days like this. Like last month I finished with 7,000, which, yeah. This is also the first month of me having the Express. This is also the month where my monthly P&L is down 5K because somewhere, I think it was this week I pulled out 5,000. Yeah, I think I pulled out five. I think I actually pulled 5,000 out on the 14th. I took a big day and I was like, you know what? I'll take the money I made that day. I pretty much cashed it out because this week was a banger. I fucking love this week. Or I think I traded this week. Was like, all right, this is good. If I hit a banger tomorrow, I'll pull out money. So in like 2 days, I made about 775, 7,600, something like that. I don't know. But and then this week happened, and then I hit a break even week. So this was like, all right. Obviously, not all models are there. Not all models are perfect. You're not gonna make money every day. Just if you can not trade 56 times in the fucking day, don't. Like if you can, I don't understand. I think this was when I was learning my model and I was pretty much like forward testing, back testing, doing all that stuff. Because in December I wasn't hitting nothing. This was me getting my mind right, knowing that this is Express and it's time to make money, and there's no reason to like freak out. Like it's same thing as a combine. Treat it like a combine, make your money, go home. You know. But then somewhere in here, I had an epiphany when it was Christmas time. I was on PTO. I had my entire family in my house. I had an additional, I had my sister's boyfriend in the house, and we were all having a good time. Got to see my siblings, got to hang out with my daughter, got to hang out with my girlfriend. Like it was a blast. I loved it. And somewhere in here, because I took off a PTO from Tuesday. No, I worked Tuesday because it was Christmas Eve. I had to work. So it was this day, somewhere between that Wednesday. Hold on a second. I had a cough. From this Wednesday to like, I think it was like New Year's Day or New Year's Eve or. Oh no, it was this day. I'm over here thinking this was this is Christmas. This week, somewhere in this week, I had an epiphany and I was on my couch staring at my daughter playing with her toys. She was having a blast. My girl is just looking at my family. They're having a good time. They're laughing. And I just sat there and I told myself, like, this could be real. Like, I could be off all the time, spending time with my family all the time, and just living life the way it should be. Not going somewhere, making enough money to pay your bills, have a little bit left over for yourself, and then spend it, and then be back in the rat race. Like, I know too many people that are in there, fuck good. I know too many people that are good people, and they're out here running around doing literally anything to survive, and that is not how I want to live my life. So I told myself, yeah, that's a $200 day. That's good. It's a $700 day. Oh, that's good. And then I hit a banger on Friday, which to me back then was a banger. And then I was like, all right, cool. And this is where Mondays, where I was trading during the super early AM, and I cut that off. I can't trade. I can't trade Mondays anymore, obviously. So I just have the 16 trading days in the month. And then I've hit a 300, a 700, 3,800 banger, and I was just crushing it. And I just told myself, You know, $223 is nice. It's a shift pay. You know, I get if I hit every time, then I'll make 4,000 or 5,000 extra a month. That much money is nice. It's good. But then I told myself, it's just a number, you know? If I have something that works, why not just make the number bigger, you know? So then I started sizing up and I started only trading one mini contract because the guys in my trading group kept telling me that MNQ, which is mini NASDAQ, its price candles aren't specifically where NASDAQ candles are. So every time you trade, you pretty much have a false identification of what happened. You know, like let's say MNQ took a area of liquidity, but the but that same candle structure on NQ, which is regular NASDAQ, did not. That means MNQ pretty much just gave you a false sweep, and it's gonna go right back up, re-sweep the sweep, and then dump, which was getting me a lot of the time, and it was low key pissing me off. But yeah, man, realistically, if and then my I started pulling up the weekly, the monthly, the daily. I started planning out. I like actually started planning out, and I'm looking at 6 time frames for the day, which is why you have to take every day with a grain of salt, pretty much. Like you have to take every day, trade for your day, have an idea for the day, and plan. You can either go against your overall bias and make sure that by the time it's no long, like the probability of it is reaching zero, that you clear out and take all your profits, knowing that you're up, assuming that you're up, right? Or you can wait for your model to present itself and then reverse. Knowing me, I'm the kind of person that's like, well, if I need it to go down before it goes up, why not just ride it on the way down? You know? Like, why are you going to stare at money going and not be on it? That's probably like a faulty thing. I probably shouldn't be thinking about that or thinking like that. But sorry. I worked a I worked a nasty 6 a.m. to 1 a.m. shift yesterday for $250 to turn around and make 3 grand in 15 minutes. This is what I'm saying. This is working is a fucking lie. Working is a lie. Anyways, yeah. So I guess I should go over the price action for. Actually, you know what? I'm gonna do it on this because I can't. MNQ, Nasdaq. I hate that this doesn't stay. No. All right, so we're gonna hit. What day was this? We're gonna hit replay. This is Tuesdays, Mondays, Fridays, price Sunday, Friday's price action, and we're gonna go to about here, and we're gonna close this out. All right. So overall, this is why I was bearish. All right. So we came up. I mean, outside of obviously knowing that this is a bearish fair value gap being inversed, and we are low key trading down. We had this draw on liquidity down here that I wanted to meet, which was that monthly low, which now it's left open because price has traded up higher. Because obviously, you know, price is somewhere up here now. So this is my draw on liquidity for the day. I was looking at it and I said, well, that's a low, that's a high, that's a low, that's a high, that's a low. So I told myself, all right, cool. Let's take this and we should retrace into equilibrium, discount, premium, right? So we're taking out all of this liquidity, right? This trendline liquidity. But we are efficient to put up this bullish for value gap. So the only thing that was gonna honestly hold me was this price action. So I'm gonna have to change this. I hate that I can't like do the minute. So anyways, so we're gonna we're going to shift to market open. Market opens, it takes this high, rejects. Mind you, it also came down to tap into this bullish for value gap. So there are two conflicting things, which I think we also left like equal highs. Yeah, we also left equal highs here. Draw on liquidity. Yeah, I know what I did is exactly what I should have did here, but you know, that's hindsight. Now I am bearish. Why? Looking at it now, I don't know. Don't beat me up. This is why we go back and we do this stuff, right? So this is the 5 minute. So 5 minute closes and we start losing steam. And we take, is this still going? All right, and we take this low here. The moment we took this low, I was in short, stop up here. Mind you, somewhere in here, I took a long because I wanted to long up into this area of liquidity with the fair value gap, liquidity resting, you know, high time frame liquidity pool, 75% retracement, and then dump because we have a low, a low, a low, a low now, right? Trendline liquidity to the downside. Market did not want to do that. Okay? Market respected its bullish PD arrays. So we came down, bang, bang, bang. We tapped into the 5 minute fair value gap. Mind you, the hour has closed and it's now 10 a.m. I'm thinking, cool, maybe we'll retrace up here into this gap and we'll dump. Because I don't know anymore. See, I thought we were going to go lower. So we're going, bang, bang. I'm in the short, by the way. Somewhere here, I'm in the short. Down money. Because I took that $1,700 loss up here, and I lost money here. Somewhere here I lost money. Alright, my stop is here. I have averaged into my position, took my money, and I ran. Right? And then we sweep the 5 minute low, and then we just traded up, and we took the 5 minute low again. I have been stopped out. I think I'm break even or something. This, in my ICT trading world, this is like supply, demand, whatever, whatever. But this is a propulsion block. If price was to come back up into this wick and reject, we could see lower prices. Mind you, in this leg down, I could have closed out and made I was down 3,400, remember? So I was down this much, and I could have made my $3,400 back. Decided not to take the money. Because LR, like if let's say I get out here and price keeps dumping and I don't get a re-entry, then I'm square on the day, but I didn't make any money. Obviously, this game is to make money. And also, reserve your capital. This shit's a business. So price did come up into this wick, traded up higher, and I'm assuming it's going to dump. Because also this hourly candle swept all this liquidity and then closed within the previous range of the 7 a.m. candle, or 8 a.m. candle, I mean, because this is the 9 a.m. So I'm in the short again. Mind you, now we have stacked highs. Wait, no we don't. We don't have stacked highs. So we don't have stacked highs. Liquidity has been rated. We are dumping. Whatever. I am now taking another short. Bang, bang, bang. Stopped out. And then it just takes off. The 10 a.m. candle is also an inside bar. Candle didn't do anything. Let's say I swallowed my pride and said, you know what? Let's take a long entry. I don't think that ever presented itself. I think around here somewhere, I started up some combines and I blew them because I was just angry. So not only did I throw, trading capital away, I threw away real money like I'm an idiot. But, you live and you learn. Obviously, my bias was wrong. I wanted to see shorts. Shorts didn't happen. I took every reason why I should have shorted, and that's not bad. Being wrong on the day is not bad. What's bad is not trading your model, revenge trading, oversizing, blowing accounts. That's wrong. You don't that like that's bad. That's very bad. There's no right and wrong in trading. There's just getting in where you fit in type thing. Not putting yourself in a group where no one wants you and you're not appreciated and not loved and, you know, all the wrong things and not being a supportive group. You know, you're in a group where you're getting bashed all the time. Like, why are you in the group? So, yeah. Friday, L, today, win. Yeah, so we swept this liquidity. We're rejecting. Why do I feel like I have a whole bunch of lines on my chart? Alright, I don't know what this is, but we're closing out of it. We also had. Jesus. What's wrong with me today? I don't know, Mikey. You worked a long day yesterday. Alright, so the low of this candle is 357.75, 358. So this is also a relative equal low. So that's cool. Actually, it's kind of funny. So drawing out this down close candle, let's say you wanted to take a retracement into the liquidity low here, into the bullish fair value gap to push price higher, we are exactly where we want to be to take the short. You know, take the short here, stop loss at the high, and then dump. But the probability of it going against you right now, it's also a 5-minute inside bar. These last 10 minutes, we didn't do anything. That entire time that I was ranting about my day, we did nothing. But this would be an area that I would short from, to short to that low, which is realistically not a bad RR. This number here is literally going to be the only thing that honestly saves you in the game. If you can hit a 1 to 2 RR and be right half the time, you will be profitable. You can be wrong Monday, right Tuesday, right Monday, right Monday, wrong Tuesday, right Wednesday, wrong Thursday, right Friday, and you can stack. Let's say you get 6R, which is a win, and then you take the 2R loss, then you have a 4R win left over. As long as your money was set dollar for dollar and it was strict and respected and all that other stuff, that could have been, you know, that's good. You know, you take four R wins for a week. You do that again day after day. And this is being wrong on the day completely, up to a perfect 1R loss. You took one trade a day, lost, walked away. Or you took a trade, 2R, walked away. Price is really consolidating though. I'm gonna take all this stuff off. I don't like all the executions. I only do it so it reminds me where I did and what I did. Friday was also one of those days where I was just like, I'm not really liking all this. 10:30? Damn. Interesting. That's such a that's such a crazy like single second dump. Interject. I wonder if we're gonna sweep this high before we go lower. See, now we have, relative equal highs. Obviously, I'm not in this move, but it's always good to go back and see and study and see like what works, what doesn't work. So we take that high, assuming we don't take the bearish high, which we might. We are bullish now. Don't get me wrong. Like I'm not hard set on shorts. If you were to counter trend, this would be your friend. But also knowing that this is the 5-minute parent candle that came down and swept this low and closed, and we have been in this range, you realistically, your stop would be up here. Your stop would be here. We're gonna put this there. So, say that's that. That's this. So you got into your move here, which is crazy because it's almost the same range as this. But you would enter somewhere in here, stop up here, dump. I'm honestly not gonna sit here and bore you with, sideways price action. But just want to be full transparent, let you guys know like what I'm doing, when I'm winning, when I'm losing, my thought process, why I took trades, why I planned my day to be a certain kind of way. But yeah, just the only way to really win in this game is to make sure the days that you do lose and you walk away with an L, just make sure those days aren't bigger than your winners. Like let's say you always land 4 or 500 on the day and you want that to be kind of like your baseline. Let's say like you want to make that your R, your RR. Let's say you always make 400. So let's say every time you trade your R is 200 for a stop loss. So you go for 1 to 2 to make 400. That's great. But now at least now you give yourself an opportunity to take 2 trades to lose 400 or take 2 trades to, make your 400 or lose. You get what I'm saying? You just want to make sure that the days that you do lose and you walk away with an L, one, don't take it personally. Don't let it like attack your spirit and your love for trading and what it can offer. Don't let it ruin, pretty much don't let it ruin you, and don't let it ruin your account. Be bigger, take it on your chin and walk away. Because there's no reason to sit here and try and make your money back in a single day when you have like the rest of your like trading career to make a difference. You know what I'm saying? Like that doesn't make any sense. Which is honestly one of the things that like I've pretty much have accustomed myself to because you have to. It's a long-term game. Don't get me wrong. I said like a lot of people plan their lives and they plan their weeks, they plan their months, they plan. You kind of don't plan that kind of stuff in trading. You pretty much just take your model and run, you know? But like you take your trades day for day, but you pretty much need to utilize your account and make it work and not lose at all. This isn't like some casino thing where you can go in and just bet the house or bet whatever. Like I don't know any casino terms. I've never been. But like see the shorts actually playing out. I don't understand why I had to trade into pretty much like the opening price of this 5 minute. But we came up, swept this liquidity, rejected. I wouldn't be surprised if we come up, kind of get into like the discount premium of this 5 minute, and then we dump again. But yeah, man, just protect your capital, your mental capital, your money capital. Protect everything, you know. But don't hold it against like the market. Like knowing just if you are scared to lose a certain amount of money, just size down. I'm always trading a mini, and I kind of refuse to go anything lower than a mini right now, only because I can't. I don't want to like execute on mini Nasdaq, which kind of going against everything that I just said. But just take your time. Don't freak out because these candles are gonna do whatever. As long as you have a stop that's reasonable, and it's like, well, there's no way I could have been right if we hit this area, you know, or markets wanting to use your stop loss as liquidity or whatever, whatever. But don't hold your capital to yourself where it kind of scares you out of taking trades and you're not gonna move forward. If you're honestly scared to take a trade, you probably should go back test and go back and look at old price action and implement your trading strategy into you know a simulated market, because forward testing is pretty much what we do every day. When the market's live, you have no idea what's gonna happen in the future. You can kind of see where we are, what we've done, and then trade out of that or trade off of it. But I'm tired. I'm ranting. I honestly feel like the words I just said made no sense. But you know, um, I'll see you guys tomorrow. I don't think there's anything going on Wednesday. We got some average hourly earnings, non-farm employment change, and unemployment rate. So that's probably gonna do something, but that's at 8:30. We don't get on the market till 9:30 anyways. So yeah, I'll see you guys tomorrow. Stay safe.